Picture this. It's late at night, and you're lying in bed, staring at your phone. You open your banking app one more time before sleeping, almost like a habit. The number is there, $10,000. Clean, round. For a moment, it feels reassuring, responsible even. You remember when reaching this number felt like a milestone, a sign that you were finally doing things right, that you had a cushion, a layer of protection between you and chaos. But then something strange happens. Instead of feeling relaxed, your mind starts running quiet calculations. Rent for the next few months, groceries, insurance, maybe a sudden medical bill, a car repair, a job loss that lasts longer than expected. You begin subtracting possibilities from that number in your head, and slowly the meaning of that $10,000 starts to change. It no longer feels like security. It starts to feel like time, and not a lot of it. That subtle shift in feeling is becoming incredibly common in 2026 because the idea of what counts as safe savings has quietly changed even if most people haven't fully processed it yet. A decade or two ago, having a few $1,000s set aside created a sense of stability for many households. The cost of living was lower relative to income, unexpected expenses were easier to absorb. Financial shocks still happened, but the gap between everyday life and emergency situations felt wider. Today, that gap has narrowed. Not dramatically in a single moment, but gradually, over time. Prices increased across almost every category, housing became more expensive, healthcare costs became more unpredictable. Everyday expenses like groceries, utilities, and transportation slowly climbed higher. None of these changes felt shocking on their own, but together they reshaped the financial landscape. So now, when someone looks at $10,000 in savings, the question is no longer just how much money it represents. The real question becomes how long it can last. And that's a very different way of thinking about security. Because money has always had two dimensions, the amount you have and the amount of time that amount can protect you. In a world where expenses rise faster than people expect, the time dimension begins shrinking, and when time shrinks, the feeling of safety shrinks with it. Psychologically, this creates a quiet tension that many people struggle to explain. On paper, they are more financially prepared than they were years ago. They have savings, they have income, they are doing what they were taught to do. But emotionally, they don't feel secure. Because their brain is no longer measuring money as a static number, it's measuring it as a countdown, and countdowns naturally create pressure. At the same time, the modern economy has introduced another layer of uncertainty that previous generations didn't experience in the same way. Stability itself has become less predictable. Jobs change faster, industries evolve more quickly. Technology reshapes entire career paths in shorter periods of time. A person might feel secure in their role today, but uncertain about how that role will look in 5 years. That uncertainty amplifies the importance of savings, but it also raises the question of whether traditional savings alone are enough to create real financial stability. And this is where the deeper financial concept begins to emerge. Savings used to represent protection from rare disruptions. Today, for many people, disruptions feel less rare and more continuous. Small, unexpected expenses appear regularly, costs fluctuate, income can vary. The line between normal life and financial stress becomes thinner. As a result, savings are no longer just a buffer for emergencies, they become a tool for navigating constant change. But if the environment becomes more unpredictable while savings remain static, the sense of safety naturally erodes. Around the middle of this conversation, it's worth pausing for a moment. If these ideas resonate with you, you're watching Prime Gorilla, a channel where we explore the deeper psychology behind money, financial security, and the changing rules of the modern economy. If you enjoy conversations that go beyond simple saving advice, take a moment to like the video, share it with someone who has ever looked at their savings and still felt uncertain, and subscribe so you don't miss the next discussion. Because once you zoom out further, something even more interesting appears. The traditional model of financial safety was built on a stable world. Earn income, save a portion, build a safety net. Over time, that safety net grows large enough to protect you from most risks. But the modern world doesn't operate with the same level of stability. Costs move faster, opportunities change faster, entire financial systems evolve faster, And when the environment becomes more dynamic, static solutions begin to feel insufficient. This doesn't mean saving money is no longer important. In fact, it's more important than ever. But the role of savings is shifting. It's no longer the final destination of financial security, it's just one part of a larger system. Because true financial safety today is increasingly connected to flexibility, the ability to adapt, the ability to generate income in different ways, the ability to respond quickly to changes in the environment. People who rely on a single source of income and a fixed amount of savings often feel the most pressure, not because they are doing something wrong, but because their financial structure depends on stability in a world that is becoming less stable. Meanwhile, individuals who build multiple streams of income, develop adaptable skills, or create systems that generate value beyond their direct time experience a different kind of security, not necessarily because they have more money at any given moment, but because their financial life is more dynamic. They are less dependent on one fixed number to protect them. And that leads to a powerful realization that many people eventually arrive at after years of managing money. The feeling of safety doesn't come from hitting a specific savings number. It comes from understanding how money flows through your life. When you see savings as a static milestone, it can feel fragile. But when you see it as part of a larger system that includes income, skills, adaptability, and opportunities, the emotional experience of money begins to change. The $10,000 you saw at the beginning of this story doesn't become meaningless. It still matters. It still provides a layer of protection, but its role becomes clearer. It's not a guarantee of long-term security. It's a starting point, a foundation, a piece of a much larger financial structure that needs to evolve alongside the world around it. And once you understand that, the anxiety that number created begins to transform into something else: awareness. Awareness that financial safety in the modern world is not a fixed destination you reach once and forget about. It's an ongoing process, a system you build, adjust, and strengthen over time. Because the real shift happening in 2026 is not that $10,000 has lost its value, it's that the definition of safety itself has changed. And the people who recognize that shift early are the ones who begin designing financial lives that don't just survive uncertainty, but adapt to it.